Right. All right. Welcome to the weekly meeting, April 5th. Okay, so if we look at the dollar, um, we took out that low, and I think we should start trending back up. I'm trying to make heads or tails of this tariff situation and the retaliations, but I think that once we dipped into this imbalance on the dollar, we got a rejection. I would have liked to see a uh, a bullish OB. We didn't get that. So we still have an inside bar. So I think we're fine. But if you're trading the dollar back up, you still have to be wary of it just continuing south. I think we're just going to get a pullback and a continuation higher. We got a gap above price here. That's where we rejected from. But I would look for price probably to pull back uh, and continue higher. I think we should break these highs, but it really doesn't matter what I think. What matters is what the market gives us. So if we don't pull back first, we'll go press the imbalance again and then pull back. But you have to remember when you're trading to pay attention to your highs, right? Pay attention to your highs and or pay attention to your lows because the protected high is going to give you your clue, right? Either price is going to respect your protected high or it won't. And if it doesn't respect the high that you thought was protected, if it goes right through that high, then you know that you have the trade in the wrong direction. And if you've been trading with our group, then I think you've been doing a pretty decent job. This week, whenever we trade, I kind of want to be more collaborative as far as which trade that you guys want to take. I think there's at least 10 good setups. Um, One of y'all suggested GBP Chef. I like GBP Chef. I like EUR Chef this week. A lot of those are just because of where we are um, in the quarter. Because of the quarterly candle close, I think we can get a good gauge of the market direction. And if the market is at a point, you know, I think most of us agree that this is going to turn and burn, right? And we just took out the lows. Like we've been rejecting this order block for forever. And we just came and rejected, or we took out these basically relative equal lows. And I would look for price to bounce and head into the opposite direction. We've taken this interior liquidity. The further down you go, you start to see where the market is changing directions. Now, I know I have this long tool way up here, but obviously, when we take this trade, we'll take it to this imbalance. And, we're going to get a rejection from the imbalance area. But I anticipate, which is why I have this long tool, I anticipate that we will go above that high. But if you can see to this imbalance or to these previous lows, you got 284 pips. So it's a good trade setup, and it's not based on your traditional weekly OB, but it's a trade that's um, due to the 3-month candle. It's at the level, and it's the same scenario with EUR Chef. All right, we had pushed up, we left a bunch of imbalance, we came back and filled it, we rejected at the bottom. So to me, this is basically the same setup. And again, if you just trade it to that to that first high, you're going to get 137 pips. I do anticipate this one is going to push up. So I think between these trades and several great trade setups, during the week, we traded EU. Both EU and GU were great. The JPYs are good, but there's going to be a little issue with these JPYs because of the uncertainty in the market. It's going to provide us great volatility, but just understand that these things can turn on a dime. And if you think about it, the JPYs are generally speaking a safe haven currency, which means if there's uncertainty in the market, we expect to see the JPYs drop, right? That's how it traditionally works. But you got to also keep in mind that let me see. This is that's not what I'm going to see. We're at a level where we were thinking that these JPYs were going to start buying, and even though they rejected, if you traded the JPYs for the buy on Friday, we didn't even come close to closing the imbalance. So there's always a chance that it might buy up a little bit and then sell down and break these lows due to the uncertainty in the market. I don't think anybody, any economist can 100% agree with what's going to happen with these tariffs, other than the economy is going to stall out. So if that's the case, and if that market keeps dropping the way it's dropping, I can see a case where we'll just keep pushing lower. With that being said, if you're going to trade these JPYs, you still have to wait for your signals per se. Just looking at this daily candle close, we ran this low, right? We wicked past the low. We actually feel this imbalance over here. We took out the liquidity on the lower side. So as far as I'm concerned, we're going to go higher, right? But I don't know how high. So to me, if I take a trade, I wait for a pullback, and then I can take the trade, up to the rest of that imbalance at least, which is plenty of pips, but it's not what I thought, in terms of how high there's a possibility to go. Like if I looked at EJ, because to me, EJ had a better setup. If I just look at the chart and I look at the chart from a monthly standpoint, what I liked about EJ was we had the pullback, we had a zone marked up here, and there's a bearish monthly order block that we never came close to tapping in. So I figured we would tap into this zone and then push higher towards this zone, which would have provided, I don't know, close to 1,000 pip move. 966 just from tap in to tap in is 966. I'm not saying that will not happen. All I'm saying is it's a little bit more muddy now. I do like that we rejected. What I don't like is that we didn't take out these lows. So it just gives me a feeling that we're going lower, right? So I don't know. I can't say with 100% certainty that will happen, but I would look for price before we ended up going way up here. I would look for price to push down. Again, I know last week, we talked about like the GA, and it had not GA, but I think EA had a daily chalk, and it bought up the same way that Andrew was saying it would buy up last week. It definitely bought up. So we didn't call the sell trade. Let me go back to this chart. Okay. Maybe it was EM. I think it was EN. But so we had this daily chalk, and I anticipated that we come up here and sell. And Andrew thought we would go higher. We definitely busted through higher. Let me see, 3 month. Okay, so with all of these pair, EN, GN, EA, and GA, they all ran these highs, right? Which is a beautiful thing. If you notice, it ran into this 3 month order block. We're above the 60%, in between the 78%. With all these pair this week, I would anticipate price turning to burn. Now, we got a bullish order block, so obviously it's probably not going to turn bearish. I mean, it could, but it's probably going to be a process. So maybe you get a push in, a push down, and then maybe this high gets ran on Monday or Tuesday, and then we start pushing down. And it'd be like more of a traditional trade that we end up looking for on a Tuesday. If that's the case, these are like I don't know, slim pickings, or these are easy trades to take. These are easy trade setups to catch, because you get these nice fat candles that are hundreds of pips long, and all you have to do is kind of wait for the trade to set up. This one candle, this one daily candle, is like 400 or 500 pips. So if you get a move like this is a no-brainer. This is an 800 pip candle. That's crazy, but this is a no-brainer pullback trade. And as you drop down in time frames, you'll see the inside bar, right? All the inside bar is basically showing you is you got Wyckoff, right? The trade is turning around. So at some point, you're going to get a pullback, probably above this candle that has no wick on it. You'll get a pullback in this area, and then this trade will turn and burn, right? So if you're looking at a trade like this setup is probably going to be available like earlier in the week, versus the Tuesday or Wednesday trade setup. So when you come off of big news events, whether it's NFP like we came off of, or Trump's trade madness, any kind of significant news event, a lot of times you'll get these significant moves in the FOMC meeting and the interest rate decisions, and you'll get some huge move. So after these huge moves, the market has to readjust or rebalance itself. So this trade, would be a gimme probably earlier in the week for you to be able to take. And, I'm not saying this is going to be a 2-day pullback or a 1-day pullback. I don't know how long, the pullback will take, but you might be able to get in that trade earlier in the week and count big pips. So I think if you go and you look, I know these G pairs moved a crazy amount of pips on Friday. I think GA was the biggest one, but those are, to me, the give me trades, because not often are you going to find monthly candles that go 837 pips, let alone a daily candle. All right. And if you don't take this trade, or you don't take these types of trades, you can take longer range trades now that the quarterly candle has kind of went and either taken your liquidity, the liquidity that you thought was being taken, or is approaching your liquidity. So in this if you're looking for a GBP CAD or EUR CAD, you might be a little disappointed. Oh, it didn't take out the liquidity. These are the examples that I was referring to last week. A lot of times you're not going to get a quarterly high ran. The market is going to look for liquidity on a different level. So in this case, we wicked, the last couple of week highs, and we end up closing below it. So this trade is likely to turn and burn. It's going to turn and dump. There's a huge area down here. I think we had a 3-week order block a few weeks ago. Price pushed down. We broke this low. We came back up and rejected right above these highs. It got enough liquidity apparently. It didn't, break this order block. But if you keep dropping down in time frames, it's going to give you enough info where you can start looking for, okay, I need to see price push below this point, come back up, and then you can start getting your position for the sell. It all depends on you as the trader. I'm not going to assume that everybody is okay with swing trading. I know a lot of y'all prefer trading on a lower time frame. All that I try to get you to understand is when you're on the lower time frame, you should look for the same things. Look for your chalk, right? Understand where your respected high is. Understand where your respected low is. The trade is in between that high and that low. You have to wait for the trade to get either to the high so you can trade it back down, or get to the low where you can buy it back up. But once the trade comes down here to this low, you need to be on a lower time frame to see this turn, right? So on a lower time frame, you're going to see this rejection right at this order block area. This rejection would have given you a chalk where you could have got in for the buy, depending on how many pips you were looking for or where you thought the trade was going. That would determine whether or not you entered this trade, or how, once you entered this trade, it would determine how far you can take this trade up. So if I'm just looking at this with the naked eye and you entered this trade at this order block or this zone, I mean, that's a 36 pip stop loss to protect. So if you're trading, maybe you're trading 1 to 2. If you're, I'm not a short term trader, so I don't really know. But a 1 to 2 would be back to this order block, back to this area. But I think that most people, and I don't know, y'all correct me if I'm wrong, but I think most people look for a 1 to 3, which would have been back to the 78 pretty much. But if you're doing that, you have to take all those things into consideration, and you have to be able to do it on your time frame. So if your trade setup is happening on the 1 hour time frame, then your entry should be happening probably on the 5-minute time frame. So as this trade approaches your zone, then you're on the 5-minute time frame looking for reason to enter this trade or reason to say, I'm not entering the trade. Does everybody understand it? Yeah.
Yes.
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 Yeah.
Yes.
All right. So is anybody struggling? Having problems? Nobody's struggling. Nobody's having problems.
I don't think I'm struggling. I think that sometimes I question what time frame to look at when I'm looking at. I know that it's always the same thing no matter what time frame I'm looking at. But sometimes when you say like I'm looking at the 3 month this time or I'm looking at the 2 month this time, it's kind of like, well, when do I look at the 3 month? Am I
That-
always looking at the 3 month? Am I
that's-
always looking at the 2 month? I know I'm always looking at the weekly at the beginning of my week. And I know that at the end of the month, I want to look at my monthly. But sometimes I think that's throw me off.
okay, so let's talk about that. Multi-time frame um, analysis, or when you're looking at multiple time frames to kind of put your trade together. Uh, this is the end of the quarter, right? Or the on the first was the start of a new quarter. So the market, if the market went like this is a bullish order block. So for 3 months, the market bought on EuroCAD. You see that? This one candle represents 3 months of action. So for 3 months, the market
Hold on.
went.
What she said, what you have to tell her is at the end of March, when the 3 month candle closed, January, February, March,
Yeah.
Mariah, 3 months have passed and the third month closed. So that's why he's looking at the 3 month.
Yeah, I was gonna say, so
Okay.
the same as with the weekly or the daily, how you look at the weekly or the monthly or the daily. Like once the candle closes. So if you look at a 3 month candle and it still has time, still has 2 months and 20 something days left on it, then you go to the next if the candle is closed, then you can use that time frame.
Okay.
So
Okay.
so it's the same as the monthly or the weekly or the daily. Once the candle is closed.
Hey, didn't I thought that's what I said. I mean, maybe it's not. But
You got a little ICT on us for a second.
yeah, maybe. But all I was saying is this one candle represented 3 months and it closed. Now, with every candle, it's the same thing, right? If this candle is going to turn and burn, yeah, you would like to see the liquidity get ran. The only problem with this particular candle is that's a lot of wick on the top. So when a candle closes and it has that much wick, right? You might not get the top of that candle ran. You have to understand that there's different, it might not require all of the liquidity to get ran from the top of that 3 month candle. Price might run some internal liquidity, like off the weekly candles, and burn. So there's a choice. The same way it is when the trade comes into your zone, right? You might have the 50% marked up, and the trade might actually go to the 78. You might be expecting a trade. Hey, I'm gonna take a trade from the 78, but it only goes to the 62, and then it turns around. So it's the same when you're looking at these higher time frame candles. You understand that your liquidity, the overall liquidity, is at the top of the candle, right? So ideally, you want to see the high get ran, but because of that wick, price might not run the high. It might just run internal liquidity, the weekly high, and then pull back. So if you look across all these candles, you'll see that sometimes the high, like on this bullish order block, the high gets ran and we pull back. But on this candle over here, when the market is ready to go lower, it doesn't run the high. It ran some internal liquidity and then it pushed down. So it's all the same. You just have to, on the lower time frames, you have to have your trigger. It's the same with though, like if we're looking at EuroCAD and Euro AUD, right? And you wanted to take a short, right? Euro AUD had a high. So you would have marked your high. And when this candle ran your high, you would have been looking for, okay, I need this candle to reject to start selling. Well, it never did. It just kept going. So you would have marked that trade off the list. I can't take this trade. It never rejected. It just kept going. EuroCAD, however, rejected. So maybe there was a scenario in this EuroCAD trade that you would have saw it come up here and you would have noticed that it ran your internal liquidity. you would have saw that reject, you could have caught you a sell back down. And I don't know where you are as a trader, but if you would have saw the rejection, and you could have caught a 129 pip trade. It depends on what you understand about trading. And this happened at 8 in the morning. So if you were on New York session kill zone time and you knew price was above that weekly high, you could have anticipated that it was going to reject and pull back, and you could have traded this down. Now, you would have had to respect this imbalance, and maybe you're a type of person to say, hey, man, I know it's going to bounce at this imbalance. It's going to reject, but it's going to keep pushing down. All of that is okay, but you as a trader have to understand where your protected highs and your protected lows are. Does that make sense?
Yeah.
And if something goes wrong, you just don't take the trade. That's as cut and dry. If it doesn't do what you want it to do, don't take the trade. And I mean, that happens all the time, which is why I always suggest that you analyze 3 trades. One of those trades is going to do exactly what you wanted to do. I don't know if y'all paid attention, but a lot of times after NFP, the market doesn't move like it did this time, because there's not as much to sort out. But because of the what did they call that, Sean? That news event, the Trump New Deal, the New America. What did Trump call this thing? His tax?
Liberation Day.
There you go. Because of Liberation Day, there was a lot of movement. I mean, it's crazy movement. After NFP. So, I really wish that we can get that movement all the time, but we're not going to get that movement. But now that you see, like on trades like EA and GA, when you get like hundreds and hundreds of pips, you have the advantage by filling in some of this imbalance. And maybe all of this imbalance won't be filled in, but you just need to get your pip count. If you trade on a swing trade schedule, you need 100 pips. If you're a lower time frame trader, you're probably not chasing 100 pips. You might be chasing 20 or 15 or whatever. I don't know. But if you map it out, or if you schedule it out, you can catch very good trade setups after big swings in the market. All right.
I have a question,
Go ahead.
Todd.
Go ahead.
Earlier in the call, you said, I think it was GA, but I can't remember because I was driving. And you said this trade might play out sooner than Tuesday.
GA.
Why did you say that?
Well, okay, let's look. So EA is the same thing. I don't think it's as many pips. If you look at this candle, right? This is a 844 pip candle. You see that?
Yeah,
That's ridiculous.
that is
So
crazy.
if I drop down in time frame, like I already see the price is starting to pull back, right?
Sure.
So if I drop to the 4-hour chart, I have this 4-hour candle, and then I have an inside bar. An inside bar is suggesting that price is turning around,
Sure.
right? You agree with that?
Yep.
So if we already have the daily candle going up, most of the time, the next candle, you're going to get a wick to the downside, right? On any given candle. When the new candle opens up, you normally get a pullback.
Yep.
So if we're looking at this daily candle, why would this be any different? We should get a pullback.
Okay, I
And
gotcha.
because this is an 800 pip candle, we can assume that the pullback is going to be over 100 pips. Even if it doesn't go wick to wick. 100 pips is, man, that's an eighth of the candle. To me, it's a high probability that we're going to win that trade, 100 pips. So you can get that 100 pips right now.
Can you go back to the 4 hour real quick? So my question to you is, what if you just get a 4 hour bullish order block?
Then you don't take the trade.
Oh, okay.
I just think that
Okay. No, okay.
all of those
Okay. That
those
makes,
questions are it's like anything else. The trade setup is here. You have the trade setup. If it doesn't give you the entry, it's nothing to talk about.
okay.
So what do you need to see to get into the trade? You need to see some liquidity get ran. You need to see rejection. Like it should be a standard play for whatever you look for as a trader. For me, it's very, very very simple. The trade setup is there. You have the structure in place. Price is going to respect this high or it's not. If it respects the high, then hey, it's on and pop. And you have a clear target. You could trade this trade right to that imbalance, right? This trade can come from right here to this imbalance, and you got 274 pips. Easy. This is an easy kill. This is, you don't get these easy setups that are in your face all the time like this at the start of the week. So I just think you have to understand how to drop down and see if the market is giving you your trade setup. Does that make sense?
Yep.
Mm-hmm.
All right, I'm going to talk about this EU trade that we took on Friday. Okay, Kai, is Kai on the call? All right, if you're in the group basically that I'm trading with on Friday night, I'm sorry, on Thursday night, Friday morning, we got the perfect setup for the sell. And I didn't call a trade. I didn't call a trade because this ran right into NFP, right? And there was two things that could have happened. Now, I didn't realize that, it was just going to drop out the sky. NFP pushed the price right back up basically to where I entered. And you could have caught that trade at 8. I think we were chatting at 8 whenever I suggested that we all get back in the trade. And I think a lot of y'all had this imbalance marked up. I don't remember what level. I wish if Kai was on the call, we could find out exactly where. But I think she was waiting for price to come into this imbalance. And here's what I was saying. When you're a swing trader, you have to kind of make decisions based on your risk to reward, right? If I'm trading a 5-minute chart or 1 hour chart, I need to be as accurate as possible. I need the trade to come exactly where I want it to go because my risk to reward is so granular, is so small that I need it to be precise. The trades that you take as a swing trader, though, you don't need to be as picky or as precise. When this trade came back here, I mean, once it hit this zone, you had a 20 pip stop loss, 25 pip stop loss. And on a 200 pip trade. To me, that's crazy that you don't take that trade. Even if you had to protect a 60 pip stop loss from down here on a 200 pip trade, I don't know why you wouldn't take the trade. You know what I'm saying? I think it depends on how you're looking at the trade setup. Many people who come to me for help or want to trade the way I trade, you show up with your lower time frame mentality, and you're thinking to yourself, man, 60 pip stop loss is outrageous. Well, yeah, 60 pip stop loss is outrageous, if you're looking for 100 pips, but the ends justify the means. And if you're looking for a 200 pip or a 300 pip trade, that's like we were looking for EU, that might not have been your best entry, your best pullback, but let's just say the worst case scenario, trade comes that, and then it pulls back up to this imbalance. At that point, you're in drawdown 20 pips if it goes higher than your entry. You have to think through. There's a series of problems that you need to think through as a trader. Is this trade going in my direction, right? And if I just squeeze this chart in, and I can look on the chart and I can say, hey man, we broke this low, price pulled back. We broke this low. So price is definitely creating lower highs and lower lows. You can't, to me, as a trader, you can't be so caught up that in your entry that you're ignoring the fact that this is pushing, in your direction. Be frugal when you can be frugal. But if you have a New York entry time or a London entry time, you have to be available and ready to pull the trigger on those kill zone times. And you have to have you have to have a good understanding of your zone, your launch pad, right? Where is this trade pulling back to? So if you would have did a fib of this pullback, that's a great entry point. So here's what I mean. If you throw the fib from that night entry to when NFP hit, NFP brought it back to the 78. Then it pushed down. Maybe you would have missed it. This pullback is still right dab in the middle of your golden zone. And this is a 915. So if you enter the trade in the middle of your golden zone in any other trade scenario, any other trade setup, this is a good trade. So my question to you is, why is this not an acceptable trade? You could have protected this high, a 46 pip stop loss at this point. And if you had traded this trade to somebody like Kim's negative 27, some arbitrary mark, you got 120 pip trade. What's the disconnect? Listen, I don't take trades based on the negative 27 and that kind of stuff. I understand it, but like some of y'all do. I can take this trade based on this imbalance or whatever. But if you're just somebody who believes in the fib or only takes trades based on the fib or patterns, like why would this entry not be okay? Because you're saying, hey, I missed this entry. I didn't want to take this entry because there's an imbalance right here. So because the trade didn't pull back an extra 18 pips, you didn't take the trade and it dropped 120 pips. A sniper entry sometimes is your worst enemy as a swing trader. I mean, we all do want to get the best setups and the best entries, but we gotta we have to be sensible that it was still in your zone. It was still in a good spot to take the trade. That's all I'm saying. And going forward, you're going to see this many times as a swing trader, especially as a swing trader, because the trade goes a great distance. And then when it comes back, you might get the highest entry point. It'll push down. That push down might be like 117 pips. Then it'll pull back 85 pips for somebody else to get in. And that person will look and be like, man, that thing already pushed 117 pips and it pulled back 80. If it had pulled back another 15 pips, I could get in. But you're not protecting that high because it gave you a different low, a lower low. Now this is a protected high because we're breaking down. Your anticipation should be that price is going to pull back and break lows. All we did was drop down in time frame to get an entry. The bigger structure picture held up, which is why we took the trade in the first place. So now when you drop down in these time frames, don't let the sniper entry get you sniped out of a good trade. Does that make sense?
Yes. Yeah, can you go to the 15-minute on this pair?
Yeah, I can. But I want to kind of show the bigger picture for a minute.
Sure.
Because this was the bigger picture. On this weekly, you get the push down, the break of structure, pull it all the way back up and fill the imbalance. You can't even ask for more. So that was the bigger picture. We only dropped all the way down to those granular time frames to get great entries. So that's why I'm saying that the higher time frames already confirmed that it was time to enter the trade. Go ahead, can you?
I was just going to ask you, that 15-minute candle that created the bearish order block after NFP?
This one?
Yep.
Uh-huh.
Can you fib the bearish order block?
Mm-hmm.
See, it didn't even pull back to the 50.
I do not care.
I got you, but I just feel like you
hold
had
on.
to already
Hold
know.
on. No. Here's why I disagree with what you're saying. This bearish order block was created off of a news event, right?
Yeah, that was actually my post confirmation. I was already anticipating the move. So I did get in when it hit that 78. I just got in. I
So
caught the knife while it was
up
falling.
here
No, right there.
after the NFP.
No, before NFP. It was right before NFP. It's the green candle.
Up here. Okay. So what I would tell you is you didn't, I mean, it already pushed down. This push down had happened the night before.
Agreed.
And a couple of people, like Latasha, said, hey, man, you left me hanging because I thought you was going to call a trade. Now, any other time, if I wasn't trading with a group, I would have got in this trade. I would have got in this trade based on, hey, this taking the liquidity, it being at the 78. This pullback is just the pullback for the NFP. So all of this happened in the ICT kill window, right? If you watch the video series, he explains, like, sometimes painstakingly, what to expect before and after a news event. So all of this, you had all of this data before you got that big 15-minute push. So what I'm telling you is, if you had any doubt, this 15-minute candle after NFP is a 57 pip candle. What is your expectation of this trade? Where's this trade going for you?
I got it going pretty far. It's
More than
like a
200
ridiculous
pips?
number.
Is it more than 200 pips?
Yeah, I think so. It's like 1.05 something.
So
Maybe.
a
It
50
might be
pip,
lower than that.
I get it. So a 50 pip stop loss on a 200 pip trade, is that a good trade setup?
I would take it.
I would too. And if you're on a 15-minute time frame and you had a 5 pip stop loss on a 20 pip trade, I mean, everybody would take that too. So that's what I mean in this scenario. By not taking that trade because you see a 50 pip candle is it's crazy to me. And I get it, if you're a lower time frame trader, oh man, it's a 50 pip stop. Well, I would say, man, you got to get in this trade because the trade is going 500 pips. You know what I'm saying? Or whatever you're looking at, however far you're looking at this trade pushing down. And if you said that this trade was going to push from this area even down to these lows, bro, that's a lot of pips. $258 pips. If you think the pip or the trade is going to push to this imbalance, 330 pips, it's still a good setup. That's all I'm saying. And it's still you still had reason to trust the trade setup. And I think you had more than a little bit of reason because it rejected off so many time frames. And I like GU too. I think GU moved a little bit better than EU, but those trade setups were pretty much identical. Does that make sense?
Yep, tracking.
So if we're trading on a higher time frame, we can't get spooked if we have to protect a little bit bigger area. A lot of times we don't have to protect that. A lot of times we can get a 20 pip or 25 pip stop loss. Many times we can do that. But we don't have to be so obsessed with the sniper entry.
There's a video that ICT made. He talks about like weekly bias, monthly bias. I found it yesterday.
Mm-hmm.
But he talked about using time of day, like at the beginning of the week. And it's just an idea. And I thought it helped, especially if I've never done it, especially talking about sniper entries. But let the market move like 30, 40 pips on Sunday, Monday, and then start looking for your entry. He was just giving the idea based on the fact that you don't have to be so early.
Which is you're exactly right. So if you notice, now I know you haven't been like as tightly involved the last couple of weeks, but generally speaking, we get a trade on a Tuesday, right? It's the easiest way for me to kind of take this group and show you exactly how to be successful. We generally speaking, if you ask the people in the group, we take the trade on a Tuesday night. So you've had all of the Monday candle and plenty of the Tuesday candle. And the reason ICT is saying that basically is the power of three, right? You have the accumulation, the manipulation, and then the distribution. So generally speaking, if price is going to move somewhere, right? If this price is going up, you're going to get the accumulation, right? Then you're going to get the manipulation away, and then you're going to get the actual move. So on a lower time frame, or maybe on a higher time frame, this is going to look like a wick down, right? To take the liquidity, and then the market is going to move away from that area. It's the same on the weekly candle. We get a bullish order block or a bearish order block. We expect for price to go up. If it's a bullish order block, we want to see it go up, take the high, then down into our zone, and then away from the trade. So I think we do that. I think we've done a great job of doing that. I like the pace that the group has taken, right? I think everybody has calmed down and don't feel like they need to be in a trade on a Sunday. There's nothing wrong with doing that. It's not, if your trade setup happens on a Sunday, there's absolutely nothing wrong. But the first couple of weeks that I had this group, everybody wanted to be in the trade as soon as the market opened. So intentionally, I didn't take a trade until Tuesday because it works. But all I'm saying, now that people have the gist and the understanding of kind of what you're looking for, it's nothing wrong. Like if you take the EA trade and it happens tomorrow, there's nothing wrong with taking that trade setup as long as all of your boxes are checked. As long as you get that rejection, and we respect the high that was established on Friday. Or if we reject that high, we go above it and we wick that high, that's fine too. But you have to have those standards in place before you enter any trade. Once you have your standards, you can take a trade. It really doesn't matter which day it is. But when you have a new group or somebody who's not really accustomed to trade in a certain way, if you set the rigid rules, hey, don't take a trade set up until Tuesday, that might sound crazy to somebody. But the market has set itself up for the action by Tuesday. It doesn't happen on every pair, but it's going to happen on one of the pairs. You see what I'm saying?
That's correct.
So that's exactly why I chose to just take the trade on Tuesday for these last few weeks, for that very reason. This trade, however, it was a trade that kind of held out for the news. And you're going to have that a lot of times because that's, the market makers make a lot of money in and around the news event. But the trade setup was there. It was there before the news. And then after the news, we still got an entry. It wasn't the best entry, but you still had all the boxes checked. You would have had to use a little bit bigger stop loss. All right, anybody got any questions? Does everybody know what they trade and what they want to trade? I do not care. All right. I think most of y'all have dropped y'all's markups. I appreciate it. Spice Girl, I still don't see your markup.
I'm doing it now. It's in depth. Thank you very much.
No, thank you very much
What
for
for?
participating.
Oh,
How's your mother
yeah.
doing?
Oh, she's okay. Still grieving. It's a lot.
Tell her I said that I'm keeping her in prayer.
Thank you. She's keeping you in prayer as well over
Exactly.
there
Tell her
in
that's the only
Colombia.
reason why I'm not riding her daughter is because of the respect, the profound respect I have for her daughter's mother.
I will let her know that, but she is praying for you as well over there in Colombia.
Gracias.
Yes.
All right, it's a great week. If y'all need help, hit a brother up. For those of y'all who have your favorite markups, I'll be requesting your information, like as far as what trades that we want to enter and what time we want to take the trades.
Why are we getting off so fast?
What do you mean?
Let's look at something else.
Like what?
I don't know.
TT, now you know.
Which y'all, I mean, if everybody feel fed, man, it is what it is.
I'm bored at work. I want to look at something
You
else.
bored. Come on, man.
Yeah, let's look at GER 30. Look how it dropped crazy.
Yeah, all the S&P dropped crazy too. It got all kinds of gaps in
Okay, let's stop recording though, because it's going to be a long session.
it. You said it's gonna be a long session.
Unless you want to record the session, just pause